So good morning, everybody, and welcome back to the third session of the day, actually. This session will be dealing with a very important part of the NPL landscape, which is real estate, in particular distressed real estate. So it's my pleasure to welcome all of you to this panel. I'm looking forward to it. And the panel will be hosted by Mr. Yannis Daskalakis. And I will now hand over to you, Yannis, and look forward to this discussion. Thank you.
Thank you, Martin. Hello, everyone. Welcome to our panel discussion in the distressed real estate market. At first, I would like to thank DDC for hosting this event, and of course, the DDC and Martin for inviting me to be the host of a panel of understanding. I'm truly honored to speak with some of the best professionals in the market of real estate in Greece. So we will take a minute to introduce ourselves in order to let the audience know who we are and what we do. And then we will jump in directly to the conversation about the real estate and our views. So ladies first, Ms. Paparaki, the floor is yours.
Good morning, everyone. Nice to be here, and thank you for the invitation. My name is Lila Pateraki. I'm the head of real estate for Value Greece. Value Greece is the company that came out, one of the older services, and the company that came out of the carve out from Eurobank, the previous FPS. Eli?
Okay. Ms. Kakoulou?
Hi, I'm Eli Kakoulou. I head up real estate at the National Bank of Greece, where I oversee REOs and legacy portfolios of assets held on the bank's balance sheet. We are the only bank that isn't associated with the servicer. And my experience is real estate and real estate lending at MBG, and prior to that, many years at Alpha Bank. And I thank you for being here today with you as well.
Mr. Georgiakos?
Yes, hi. Good afternoon also. Again, my name is Konstantinos Georgiakos, and I'm heading Interim Real Estate Services Company, a newly formed entity that provides real estate services from A to Z to the Greek market. My background goes back to more than 2 decades in various sectors and markets within the industry, such as US, the UK, all over Europe, and in various positions, finance, equity side, and advisor.
Dr. Moudis?
Hi, my name is George. I'm the managing partner of Delphi Partners. We're a real estate asset management firm based in Greece, Cyprus, and a small presence in Italy and the UK. And essentially what we do is that we offer a turnkey solution when it comes to real estate asset management, from underwriting up until monetization of the assets, working with a few guys today on the panel, all the local banks and the institutional investors that they buy NPLs.
Mr. Fanos?
Hi, everyone, and thanks for the invitation. My name is Yannis Fanos. I'm a partner in Arbitros Real Estate. We offer holistic services in the real estate sector to mainly institutional and private equity clients. Our main focus in the area has been on the underwriting side, on buy side and sell side recently. So either supporting funds who are looking to buy these portfolios and help them value those portfolios, or on the sell side, preparing them for a sale mandate, and also very active on other fronts, from the due diligence, technical and commercial, to actually doing things on the ground, from development, capex management, and asset management.
Okay, and little things about me. I'm Yannis Daskalakis, the co-founder and managing director of Daskalakis and Associates Private Company, a firm that was originally established by my father around 30 years ago, and now redesigned to be able to offer holistic services in real estate through 3 different teams: the engineering, the valuation, and the agency. This was it. So let's jump in the basic themes. 1 year ago, we were talking about the market the real estate market that is going up. and upward moving investment demand, and we were expecting that 2020 would be a great year for real estate. Then COVID happened, so I would like your views. What happened in the real estate, depending on different asset types, and what do we expect from now on? Mr. Panos, can you start and let the conversation flow from now on?
Of course, and thank you for asking the first question to me. I'm joking, of course. So this is a difficult question, and I assume everybody in this, all these professionals who are very experienced, have also a view. What have we seen? I mean, we also have done a lot of work on this space, obviously, because we need to service the market and advise our clients. There is no really easy answer to that. There are certain asset classes that have been more, I guess, affected than others, and some other asset classes that have been much more resilient and will be more resilient. So, if we were to look at the stock, at the current stock that we have seen from the NPLs and the banks are holding, it's much more granular. It's not so, obviously, with exception, we have seen some very good commercial assets. But in general, it's much more mid-market to low-tier type of product, not the same kind of first class in terms of size and quality that you would expect. So is the crisis going to affect that product? In which way? It depends. Of the economic impact, but also because things are changing, and e-commerce is also picking up and will continue to pick up. Now that people are getting much more familiarized, go back the same way they were before, just physical space retail. So some of that will be impacted. Would the hospitality be impacted? Certainly will be impacted. Certain markets more than others, but this is more short term. So come back, if not next year, 2021, 2022, and definitely 2023. Assuming, of course, we're going to have the vaccine by some point in first Q1 for everybody to be able to use Q1 2021. But what we see is also secondary office will definitely be impacted. That doesn't have the technology, the virtual meeting room space, and the health and wellness aspect have not been addressed. So yes, there will be an impact there. But on the other hand, you have logistics. You have doesn't matter if the quality is not great, especially if the location is great. You have also residential. Again, this is just quality questions, not to do with pandemic. People will obviously understand how important to have a nice place to live and work from nowadays. So anything that makes sense would definitely have demand, and people will actually understand that they should be spending more on where they live and where they are. And that we have seen that. I spent a lot of time in London. I split my time, so I have seen that in London actually. Even in the last few months, there's a big trend of people moving out from the center and looking for space outside, or better office, or better space to live. And obviously, we all know that in these big cities, space is not the first thing you look at. It's more about the location. So yeah, in a nutshell, I think different asset classes will be impacted differently, and therefore valuations need to be. You cannot have how can I put it? An answer to okay, everything will go down 10%. I think you need to look at every asset class, every location, every type of asset, to make up your mind. But logistics and residential definitely are going to be more resilient.
If I may add to that, I think it's interesting to see what happens worldwide in real estate. And we have seen even during the COVID period, that transactions continued. Yes, I'm talking about investment, not necessarily NPL stock, but there are some interesting things to get information from. So we've seen that transactions in the world or in Europe have continued. Volumes are quite significant, and although there was a delay between March and June, July, a lot of transactions picked up in July, August, September onwards. Yes, there was a repricing in all transactions, and it was mostly investors' perception that due to COVID there should be repricing. But I guess we're not sure where that would go moving onwards. It's also interesting to see because we talk about residential, we talk about logistics or big boxes that have shown a lot of resilience in the market so far. But for example, I was reading the other days that it was a holiday in the beginning of October for China, and there were some millions of people traveling around China for the holidays. So hospitality is currently suffering. I'm not sure how long-term that would be, because people have a tendency to travel, and therefore if you confine them in an area for a long period of time, then I think we will see the opposite effect once traveling and once the situation is normalized and people are no longer afraid. And as far as offices are concerned, there's a lot of discussion about the new way of working, that of course a lot of people are working from home and all that stuff. But don't forget that this has been implemented, and it's not so much in Greece, but again, looking worldwide, this has been implemented for a number of years in other countries. We were talking about hot desks in Europe for the last 5-7 years. And at the same time, what the pandemic has done was increased or put new norms in terms of increasing the space between desks. So you might, even in Greece, find out that companies will need less people to host, even if we're going with hot desks, into a specific location, but because the distances would need to be larger, then we will end up with pretty much the same square meters of use of space in order to accommodate, half the people. So I don't think the verdict is out as to what will happen in real estate due to the pandemic and due to COVID, but I think there are positive and minuses that will balance out, with the most important for me being the fact that there's a lot of money that has been raised for real estate over the last couple of years, and that money will need to find its way into assets. And therefore, eventually it will drive prices up just because there will be no product.
Just to jump in there to say a couple of things about what we saw in the market for residential sales this year. Surprisingly, the residential sales have gone very well. I think the momentum of 2019 spilled over into Q1 and Q2 of 2020, which is why the central bank figures showed increasing prices for residential sale assets. On our side, on the REO side, we've doubled our sales from last year, and that's probably because we started using electronic channels for sales, but we've sold everything so far above old market, not new market. So that's probably a signal that there are local buyers for the purchase of our assets, which as you all know, our portfolios are fragmented. We have thousands of assets spread out all over the country, from the northern part of Greece through the island. So you always have local interest. We haven't seen, foreign investors, obviously, in the residential market after a small pause for the golden visas and the Airbnb, but sales for REO residentials, which for about 50% of our portfolios, are going well. And as Lila said, offices, we're waiting to see. As we all know, there isn't a large stock of grade A offices, so there's room for builds and green buildings. And I think I fully agree that there is a balance there with the need for space for health measures and the need for new buildings to replace the older, more obsolete buildings. So my take is that, okay, it's early to say whether we'll see something bad if this continues for years. Our sense is that 2021 will be gradually seeing, the end of the tunnel. So if we keep this momentum, even with lower levels for the next few quarters, we should be coming out next year at a relatively decent place.
Yeah, I would like to add also, just I agree with what Eli, Lila, and Yannis said. The societies and markets went through a shock the first few months of the pandemic. We tried to adjust. Some countries did better than others. I mean, Greece is a good example. Thank God. And this was also, I mean, it was good in Europe and all over the world because being the black sheep, this was an opportunity for us to prove that we can handle crisis. Now, again, certain asset types, will perform better and are performing better, which are, again, like logistics and residential. But to my opinion, I think, there is a transitional period and we will see, like changes in the way of, business happening in the future. And this also has to do, with people like getting being adapting a new way of working from home, which was not definitely the norm for the Greek market. I mean, as Lila said, in Europe and the States, and maybe in Asia, this was part of business working from home as well. But here it was kind of a taboo, working from home. So basically, I think, we will be need, for like offices, with more space, just adjusted, for a rotation between employees. So, and again, if you don't have to sell during the crisis, and which, to my opinion as well, I believe with the rest, it's not going to last for long. I think, as soon as the vaccine and the formula will be out in the market, I think things will go slowly back to normal. But if you don't have to sell right now, if you're like not under pressure, and wait, I think just we're not going to see any major like distress sales going on due to COVID. However, COVID might accelerate distressed transactions, but COVID's not going to be the cause. It's going to be the acceleration, point of this transaction coming earlier than later.
Yeah. I mean, this is George from Delphi. I will agree with Lila and Eli and the rest of the panelists. I mean, what we have seen is that working with 4 banks and 3 services in Greece is that despite the fact that we had all the issues traveling and foreign investors, despite the fact that you could do virtual tours, all the demand that came from granular REOs came from locals. And we have seen that they're willing to pay at market value, sometimes above market value, especially granular real estate. That's resi and SME type of commercial assets. And, we have seen them buying day in, day out. The only issue is that the public services weren't supportive to execute quickly the sale. So the issue there is not the appetite. I think COVID wasn't, we had a freeze of sales for 3 months. There was a repricing for some opportunistic investors or buyers, either for investment purposes or own occupation purposes. But the major problem we had was to execute and conclude the deal with the public authorities and the restrictions that are currently in place. So, we're a bit optimistic about that, and I'm sure Eli will agree, and Lila and the rest of the panelists, is that, there is momentum from local investors for the REOs. We're talking about the REOs and not the larger institutional assets that, yes, they are office space. We might have seen some slowdown in repricing and maybe freeze of rents. But on the other hand, I'm sure Yannis, who have worked together on a couple of deals, will say that, there is a huge demand on logistics right now. Most of the firms are investing in e-commerce, so they want distributional hubs. And so COVID has had a positive impact as well, despite the small kind of freeze in the transactional demand.
Okay, before we go, okay, sorry.
Sorry, just to add to what George was saying, is that one of the things that COVID, I mean, he mentioned about, Ellie and George mentioned about the local investors, which are important, but I think it's equally important, especially for the sales of REOs at the volumes we're going to eventually have them, or if you want the sale of collaterals, let's put it this way, that will become REOs at the volumes we're going to have it. I mean, only in the value we're dealing with about 24 billion assets worth of assets, so the numbers are huge. But I think so. I think it's important that we attract international investors as well that will be willing to put their bets on the local market and on the granular assets as well. Now, again, I was reading the other day that, for example, before going into what I was reading, the one thing that crises in general are doing, and I think it's important, is that they tend to make investors concentrate on their core markets. So, and because Europe is considered sort of one market, investors would concentrate, the European investors would concentrate in Europe. So I was reading what I was reading the other day, that 77% that German investors bought in Spain, and the majority of that was quote unquote REOs or distress or whatever we want to call them, assets. And we saw a 77% increase in reference to 2019. So the bet, I think, for us is to make sure that that demand that exists and is out there is moved towards Greece. So I think there's a lot of, it's good to rely, and it's the importance, even those investors will end up need to attack the local market and attract the local market in order to go to the end sales. But for the servicers, I think it's very important that we attract the international investors that will buy transit portfolios before we go into the local market.
May I say something? Maybe I'm jumping ahead, but because we are still discussing the impact, I think it's good to be optimistic on the other side, but also it's good to be realistic. There are two different things. One is the bulk sale, the wholesale market, those who are going to buy in volumes. Either now they're buying NPLs or they are, we all wish at some point when some of the collateral will be converted, and that's a long process and a tiresome process, that they will be buying REOs, and it's a tiresome process as well because we know about all the planning irregularities, and good luck to everyone who is going to deal with that. I'm sure you will succeed, but it will take a lot of effort. And then we also want those who are going to buy REO in wholesale, REO, granular, not very sexy and so on, with some potential, and the pricing matters. And then we have on the other side, the local market, the national market, those who are actually going to buy one by one, the retail market. So it's a play that we have seen it happening in Italy, definitely Spain and so on. And then we have not seen that increase yet. So if we don't have a strong national market, a market that is supported by a strong mortgage market, so banks that are healthy enough to be able to support not only the ones that make perfect sense. So I personally, or we as a business have done that for others to get financing. Or personally, I want just to refurbish my house. And the process, and I hope I have a great credit score, but the process that I am going through shows that the banks are not there yet. And from what they're offering and so on. And I am with them right now, we'll do exactly the same. So the two fundamentals that we expect to see before that's kind of optimistic, which obviously we all want to be optimistic, scenario prevails, is that we need to see a stronger national market, which means growth, consistent growth, stable growth. That was trying to happen, but unfortunately the pandemic will have a big hit on the economy and so on the disposable income, and a healthier and growing mortgage market. Without those two, or at least people believe that this is the starting of the cycle, we won't see those institutional investors, the wholesale buyers. So yes, money are around, but why would they go to Greece if distress is happening in other markets? So we need to be clever, and we need to find the right product with the right pricing to offer it to them. We have to make their life much easier. And I go to George's point, and I finish here, is that of course, the ecosystem and the public service as well need to be part of that game and not create more obstacles than the one they have created in the past. And I'm much more hopeful now that we have a government, I would say, that is listening and understands a lot of those issues.
I just want to add something here. You know, why funds will come to Greece? You know, basically, if you I've been following, you know, the sovereign bonds and the yields, you know, like from prime assets, and one can see, you know, clearly that, you know, between like the Greek government bonds, DGBs, and the yields. I mean, we say that, you know, let's say of the CDB Athens, we see them square, you know, like Vasilis Sophias around the area. There is still, you know, like spread, you know, compared with other countries, you know, like Italy, Spain, Portugal, you know, Ireland, which the spreads are really, the spread between the government bonds and the yields have been really, really compressed. However, I could not agree more than Yannis that financing liquidity and buyers-friendly, you know, products are a must, and the banks have to adapt because, let's be honest, you know, growth for the banks with stability will not come, you know, by refinancing blue chip companies within Greece, but mainly will come, you know, going back to, you know, like the mainstream, you know, like consumer products, you know, mortgages. So basically, you know, I fully agree that, you know, like a type of staple financing, you know, like, or mortgage financing, like, you know, like vendors buying financing, name it as you wish, should be part of the disposition strategy of the services / banks in order, you know, for boost sales and, you know, like attract local and international players. Bye.
I think we based REOs versus NPL portfolio sales. We have now again a little over 60 billion still, you know, in NPLs to get rid of. Now REOs are a tiny portion of that market, and it's the organic reduction that the banks do in parallel with the sales. So we're all selling billions in NPL portfolios, and an amount which is small. I mean, it's not fully disclosable, but all four banks together are circa 4 billion. So 4 to 5 billion, we can do the math. That's a tiny fraction. And why? Absolutely, as both Lila said, we need to attract investors. Yannis as well is right, because one-by-one sales are very painful, not only for the banks, but if you think about the funds buying the portfolios, eventually loans that aren't restructured will have to be liquidated. So there's a future REO bunch going off into the fund world, which is still going to hit the market at some point in time. And underlying all of that is the infrastructure that we have in terms of lending, legal, and sort of more bureaucratic. Well, I have to sort of put that delicately, but we all know things here take time. And it's not only the zoning and the legalization of assets laws that that give you basically several months before you can legalize an asset to be able to sell it once you've gotten it from an auction. And let me make a small parenthesis there. You go to the auction, it takes about 4 or 5 months to get the asset under your name, whether you're a bank or an individual or a fund. And then it takes several months, up to 8 it could take, to actually get rid of any impediments from the point of zoning or other types of laws dealing with the actual legalization or maturation of the asset. So there you have a problem that's not only the bank's problem, it's going to be the fund's problem in a year or two from now. And those are things that, you know, obviously they'll act as disincentives for those large funds that we want to attract. I mean, we've already attracted Bain and Carval and Centerbridge before, and we have some people who know our market, some funds, but we certainly like to attract more. And you're absolutely right, we all need to work on that.
Yeah, very true.
Yeah, so you talked about two things: attracting the international demand, which is already there, but is going in other areas, if you want. And the second thing that we have a lot of properties which is allocated in the locations other than Athens in Thessaloniki, which should be disposed and absorbed by the local market. Which do you think should be the next steps for both of them?
Yeah, I mean, okay, yes, that's a good question because, you know, I mean, as one of the master services here in Greece, you know, we're facing this, you know, this issue. Basically, the vast majority of RIOs and potential RIOs, you know, like collaterals, are mainly located in Athens and Thessaloniki and the main cities. You know, with Athens and Thessaloniki having, you know, the majority. And then you have Patras, you have Heraklion, you have Ioannina, which again they're like major city centers that also, you know, like take part of the pie. Now, the government should try, you know, to step in and somehow support this process. And what I mean by process, the process of, you know, like the banks decompressing, you know, taking out these assets from the balance sheets and, you know, selling them to funds and then going out in the market by trying to, you know, like provide, like, let's say, tax incentives. For example, you know, like you could like, you know, halve, you know, the real estate transfer tax in areas where, you know, income is really low, let's say Thracia, or, you know, like areas in Macedonia and the islands. So this is a good incentive. Also, you know, actually what the government is doing right now with a new individual bankruptcy role and trying to set up this structure that you would like, you know, this scheme will buy, you know, the asset, you know, from the bank's books and, you know, like assets that basically cannot be serviced by individuals that they're really in a bad financial shape and they don't, you know, and they meet certain criteria, for example, you know, income, net wealth, and such criteria. So basically, all this will help, you know, like support this sale of these assets that are placed in secondary markets. And of course, you know, I mean, you know, looking, you know, the portfolios in order to, you know, speed up sales, because as I don't know, I think Lila said that, you know, mention a name that, you know, in the next 5 years, you will see like vast, you know, like lots of assets going in the market through, you know, Hercules program, through, you know, like sales of RIOs, sales of NPS, then becoming RIOs. So we'll see thousands of assets from, like, say, 2022 to 2027. Then, you know, in order to decompress this, you know, the whole process, you need to put together portfolios. And then in the portfolios, you could like combine like primary with secondary assets and trying to come up with a product that will be, you know, like well accepted from investors, local and foreign. Otherwise, you know, one by one, these granular assets, there's no way you will sell them. And also, of course, you know, subject to the market condition at the time, you should consider, you know, like discounts. For example, I don't know if you're following up the Spanish market, you know, I think it was BlackRock or Blackstone. I think it was BlackRock. Now it's Blackstone. Sorry, yeah, Blackstone. You know, 1 billion, more than one. It's 1 billion, close to 1 billion pounds of assets right now, and they're trying to put, you know, like, you know, sweeteners in order to sell them. You know, they give like 10% discounts, subject to meet some criteria. Because the Spanish market is a good example. You know, that, you know, it's been like, you know, like stuffed right now, and, you know, they need to find ways of decompressing. So basically, yes, there is a problem. The government should step in and support, as I said, with tax incentives. Another, you know, like way of dealing with that is also, you know, there is a restriction in the risks. You know, when you buy residential assets up to 25%, if I remember correctly, on the book value, on the, you know, anyway, of the assets invested at the time. So basically, I think this shall be released, or, you know, at least, you know, doubled, in order to support also this process, because a lot of those assets will be residential assets. You know, in the States, in Europe, you have like, you know, rigs that they are like theme rigs. You know, you have like residential rigs, you have, you know, hotel rigs, you have mortgage rigs. You know, I mean, you know, we need to think, I will say nothing out of the box, in the box. And why I'm saying the box, because, you know, there are other markets that have done that. So we don't have to think out of the box. You just take something, you know, that is being like used in the States or in Greece, in Europe, and try to bring it and adapt it to the Greek market.
I think what we're doing here is because our market is also, and I fully agree, is a little more difficult. And Konstantin is absolutely right. We need to get some assistance to be able to sell the more difficult assets in sort of the far reaches of the country, is to acknowledge, and we as banks, I think, do acknowledge that certain areas where we get assets are bound to be sold in those areas. And there we have to be willing to give mortgage loans to assist the local population in buying these assets. These assets are there and someone lived in them and someone can live in them again, obviously. So there are buyers in those markets and we just need to be there to assist them. My suspicion is that we'll have to hold on to the assets in the more difficult areas, because I think from our experience, most of the foreign investors we deal with prefer the larger cities, and of course it makes sense. What we've done is our strategy of selling one by one will slide over into 2021 as well. And if we do a portfolio of properties, we're going to go into 2022 when we have greater visibility. You know, our cost of carry is low, so we have to do the math between the discount and carrying the assets in certain areas. And that's an exercise that we do and we update every day by ourselves and with our advisors. And George is one of them, Yannis is another, and we're there reassessing our plans and seeing what is the best way to deal with these properties. And for the properties out in difficult areas, it's a more painful process. We need to give the mortgage loans there and to do a more localized approach. And that's the way we're going to have success for those particular subcategories. As for the portfolio breakdown, it certainly is that. And I think everyone's portfolio has circa 50% resi, other people have 60%, 65%, and about 50% or a little bit more is in the Attica and Thess areas. The rest of the assets are really spread out, and then that's the tough portfolio. But we are there, and you know, as a bank having branches throughout the country, we do have also very healthy targets for mortgage loans, and so does every other bank. Yannis is right, we still need to work on that a little bit more, but that certainly is our target as well. Sorry, Konstantin, you were going to say.
No, sorry, I thought you were done. I'm just saying, you know, that we saw, you know, like a very, you know, like a good and successful example from my Eurobank when they sold, you know, like Opus and Star. I think George was involved. I don't know if I think George, you were involved in Star.
Yeah, we did Star, yes.
Yeah, and it went very well. I think there was demand. Eh?
Yeah, there was demand. I was going to mention that. You know, the issue was that all those assets sold were legacy assets, right? And they were 700 plus. So the legacy assets.
About Star, eh? You're talking about Star now.
About Star, yeah. We sold Star. The problem we're having now for bulk sales, and we had 2 bulk sales with 2 systemic banks, and all have been cancelled for 2021. Hopefully, we'll start the first Q 2020.
You breaking up, George.
To monetize this book, so we have to transfer.
Yeah.
Sorry, am I breaking up?
We lost you.
Sorry, guys.
Yeah.
Can you hear me now?
Now you're back.
So the issue was we had to transfer 700 assets one by one. You know, in Greece, this doesn't happen overnight. So, you know, we need to create tax efficient and cost efficient structures for the investors. And then the most important bit is to get the pricing right, because, you know, in that book, we had like 25-30% land, and land investors are very, very aggressive and prudent about their pricing, especially land and not in Athens or Attica or Thessaloniki. So We need to get the mix right. We need to get the pricing right. And the most important bit, and this is what we have been started doing with two of the banks, is that we need to do tax efficient and cost efficient structures for the institutional investors to acquire these vehicles. Because don't forget, they buy wholesale and they sell retail. If they don't get a good enough pricing, their IRRs are pretty high and they won't do it for single digit IRRs, right? So for us, the biggest challenge is to get the recipe right. There is demand, and we have like a list of more than 20 institutional investors. And just for the sake of argument, the big boys that they're buying NPLs, they're not willing to buy granular REOs. For them, it's a very small ticket, 10, 20, 30 million. It's just too messy for them. These are mid-size, small funds with assets under management less than €1 billion that they're willing to do that. They're willing to buy wholesale and sell retail. But there are issues that we need to tackle. And, the forefront has to be the banks and the servicers. And, and again, we discussed this with Lila and Konstantinos several times, is to, and you need to have stock to sell it, right? First of all, you need to onboard the assets and then find ways to monetize these assets. And this is another issue with the...
You are all forgetting the legalization part, which Eli mentioned.
Absolutely.
Briefly, which is the big elephant in the room here. I'm sorry, George.
I did mention that. I said good luck.
Category 4 and 5, it's been, I think the headlines the last few days. Plus, I just want to add what George said, and I think, we had this discussion the other day with all of you. Product that's coming out from, scamming will come out from the REOs, it's kind of obsolete, okay? So there is, again, if you want to sell, you have to package it, with finance in order, to go bring this product up to today's, standards, meaning that, you have to refurbish, and, so basically this is also an issue, because the construction has been in art the last 10 years. So the product that is there has been like more than 10 years, and this is problematic.
And most of our assets are not even 10 years, they're 20 and 30 years. So that's the real age of these assets. And those are hard, and legalization, and the restrictions there, which are well meant. I mean, obviously those measures and decisions by the government are meant at ensuring that people, build legally and keep to the zoning requirements and environmental standards. The only problem is that when we buy from an auction, we have no visibility as to what we're buying. We don't have visibility, the funds don't have visibility. A simple citizen does not have any visibility. So you could end up buying the asset to discover that it's a category 5 asset, which is very difficult to legalize or could potentially even need to be demolished. And then again, for the categories 1 through 4, and this gets very technical, but it just leads to higher cost, and that needs to be factored in. And what our suggestion was through the Hellenic Bankers Association was to not create an exception for the banks, but to create an exception for anyone buying an asset where there's no clear picture of its status. And I think that's just fair, and we're waiting to hear from that, not too optimistically waiting, but we are still waiting.
It's been a while, Eli, it's been a while, and you banks have to lobby.
George?
The banks need to be a bit more aggressively on that front and lobby the government so as this get implemented yesterday, because we have been discussing this for the last 2 or 3 years.
And for the last few months. One thing to say though is, because we've heard a little bit of criticism here, we need to acknowledge the government measures taken in the spring. I think it's phenomenally swift. The response of the government was phenomenally swift. Basically, not only the measures on restricting movement, etc., but the measures taken in this country were particularly generous. And this was before the Next Generation EU fund package came out, which goes up to even potentially 75 billion for the country. But back in the early weeks, measures came out that amount to about 9.3 billion, including the Yefira program, which basically subsidizes the mortgage loans, and that's currently, we hear last couple of days, plans are to extend that into 2021. So for all categories of borrowers, even borrowers that are in default, there are measures for protection. For the good borrowers, it could go up to 90%. For the more credit challenged borrowers, it could be a lot less, but it's still there, and it's quite a lot of money. And we have the warranty fund from the Hellenic Development Bank, and that gives you could get a guarantee for up to 80% of the loan there. And banks have already given about 2.5 billion in loans, where the guarantee is not really, it doesn't go up that high. It could be less, but it's there, it's available, and you could go up to 80%. So the government's done quite a lot there, and there is liquidity. So I think we just need to get it right. The government's helping quite a lot. We still have, way to go, on our side as well. And the government could help in other areas as well, but it's been a hard year. So I think we need to give them credit that they've stepped up very quickly and positively there.
I mean, on a positive note, because I'm a bit on the realistic side, so I'm not so optimistic. We have some good fundamentals. The good fundamentals is that we have a stable and business-friendly government. I think they're trying to support as much as they can. We had, and we're going to have. That's why I believe it's a reset. No, it's not a reset. It's a continuation of the growth that we had beforehand. So I think it's a pause. It's our view, our firm's view as well. So there was a growth scenario, and things were going and getting much better the last years or so, at least the last 18 months. And that we expect to continue, especially when the good news from pharmaceutical trials come out, and we know that we have a vaccine in place. It's a matter of time that everybody gets that, and therefore the pandemic will be hopefully soon a distant memory. So we have some very good fundamentals. At the same time, the banks are willing to do something about it. They're talking about it a lot of times. They're thinking about out-of-the-box or in-box solutions. We have the services. They have been mandated to do something. They're right now dealing with NPLs, not legacy REOs. Some of them are dealing with legacy REOs. So on that front, I think we have a market which is moving, a market which is full with institutional people experienced and coming, also have worked abroad, which is really good. And I'm obviously talking about all the people in this panel. And I think the fundamentals and the basis is here. What we need is obviously give the product to those who are interested to buy or invest. And that product is essential to be found either, as we said, with some tax efficient structures or the right kind of portfolio mix. We cannot just put the low-hanging fruits, the Athens and Thessaloniki's assets and expect, and then we have to deal with the rest. We have to do a nice mix. Maybe, and I agree with the residential, logistics, or hospitality focus. So there's a lot of work needs to be done, and we're actually doing that work with the Greek bank. We are actually assessing the whole portfolio, splitting it up, and try to see what we can do. And if there's going to be another sale, it's a really good piece of tiresome work, but hopefully we'll come to an end on this soon. And then the last thing is actually support the local market at the end of the day. So it is not a simple thing, but definitely we have the right people, the fundamentals, and we can drive the solution forward. And also think that those who are buying NPLs are not going to buy REOs, and those who are buying REOs haven't really, we know the names, we have seen the people, we haven't really come to Greece yet. They might be looking, so we need to bring a new type of investors. And that's something we as advisors or the community, I'm talking the ecosystem, needs to work on and focus on to help our clients and the services and the banks to deal with the legacy and the forthcoming REO portfolios from the onboarding process.
We have a question from the audience. So, which is the percentage of the category 4 and 5 unlegalized spaces in REO portfolios right now?
I can tell you that in general, because we were looking into it, and there were some numbers published in the National Chambers of Greece, the technical, Chambers of Greece. So in general, I would say that the majority, if we are talking that the repossessed portfolio comes from auctions mainly, so repossessions through auctions. I will tell you that the majority of the assets, so about 85 to 90% of the assets that comes through auctions have illegalities that need to be legalized in the process. And I would say from those, about 30%, according to the Technical Chamber of Greece, is category 5. I don't know about category 4, but category 5, which is the category that you cannot legalize according to the new legislation, and the only remedy is to demolish the asset or bring it to the original condition. So that's about 30% of all the illegalities we see. So the percentage is quite high, assuming that the majority, as I said, that the majority of the REOs, that people won't be able or servicers won't be able to do something with the loan servicing, and then the collaterals behind the loans will end up being REOs in order to be able to be disposed either to portfolio buyers, real estate portfolio buyers, or to individuals.
Without disclosing any, private information from our side, what we did as of last December, when an extension was given till the 30th of September for the legalization, is we, in our decision-making process, which involves a committee where the assets are looked at one by one, we were very hesitant to go and repurchase assets that looked as if they had a high level of irregularities. I think those irregularities, whereas you don't have clear visibility, you can suspect the level 5 when you have even drive-by view. So you could actually avoid those assets. The problem is, so we have a very small percentage, to be honest. However, the point is not how much we have or somebody else has. The point is who's going to buy these assets that, as Lila said, they're there. Yeah. And in order for these assets to be purchased by someone, there has to be an incentive. So that's the whole issue there.
The big
Hear you.
Sorry?
You're back. We couldn't hear you for a while.
Yeah.
Now you're back.
Can you hear me now?
Yes,
Yeah.
yes.
Yeah.
Okay, sorry for that. I think the biggest incentive is the pricing. And what I mean by that is the right underwriting. And obviously, if we don't have perfect information, we are not magicians. Obviously, with no perfect information, we don't have access to the site, and it's not a consensual process. We need to make some fair assumptions. And there are certain benchmarks that we use. I'm giving you an example about the illegalities of the properties. It's very big. It's a huge assumption to say that all of the property is illegal, and therefore it's a 5 in illegal, therefore we need to demolish the whole property. Or it's much more safer from all the things we have seen, because we are on the technical due diligence side, we do much bigger projects. And for like hospitality, we have seen a lot of things. And even for, we have worked with some of the other servicers. They want to, the low-hanging, and a transaction has closed like 1 year ago, 1.5 years ago, and hasn't, or has been agreed, hasn't been closed yet. And we have been involved in making sure that all the planning is right, and it still has taken 18 months. So having seen a lot of different cases, small and bigger, we can have some benchmarks on the illegalities, let's say 30 or 40% or 20% or 10%. So that's the pricing. And I think what needs can say, you know what?
Yeah.
Can you hear me?
You're breaking up and
now am I breaking up? What did you hear?
Now you're back.
Anyway, I stopped because I'm breaking out. What I'm saying is pricing is important, and in the underwriting we need to make some assumptions on the illegality.
And on a positive note, next year, or as soon as the information per asset is available in the digital site that is being prepared, where we will have the information on the assets, this will assist in seeing exactly what problems each asset has. The whole point here is to ensure assets are transferred, that there is a market for them, and that they're not just thrown out of the system, because we have to eventually buy them or do something with them. So I think the bottom line there is, as you all say, the measures need to be taken, some assistance needs to be given for this interim period. The price has to be right, so you don't want to end up paying more for it to discover that you should have paid less. So we need to work on that with the authorities.
True, but we need to take into account, because you mentioned the digital identity of buildings, that we need to take into account that we're not necessarily, and I wasn't referring necessarily to REOs right now, I was referring to the majority of the assets that are currently only collaterals and eventually will become REOs if and when no agreement can be found with debtors. So the majority of the assets we are talking about, and the majority of the assets and the numbers I was throwing at, what are relevant to the number of assets that generally exist as collaterals. And one of the things that the electronic identity won't cover, because I don't see how it's going to be done, is on those collaterals that have not been yet repossessed, and you have probably in some cases no willingness for somebody to spend the money to do the electronic, the digital signature of the building, let's say, then we will end up with the exact problem we're today with the category 5 assets, which is that you will have a number of assets that eventually will need to be repossessed by investors. I'm not talking about banks, I'm talking about investors and servicers, or the investors behind the servicers, where people won't know what that asset would be. You will find out after you repossess, and then you will have, the investor will have to figure out what it's going to be. And if it's demolishable, that's one way of looking at it, and that's the easy way, because again, you were left with a land. So, okay, fine, at least you have a land. There are cases where if it's part of a complex that you won't be able to do a lot of things, and then you will be left with a number of collaterals that will have zero value. So I think this problem of the legalization, while on the one hand, I totally agree as a citizen that this should stop, and eventually we need to build according to rules and regulations, and we are one of the very few countries that still has that privilege of building without being legal. On the other hand, we will be left with a huge stock of assets that there will be nothing to do with.
You're saying that the process should be opened. We should.
I think that what the services suggested in the government was that there should be a grace period for assets repossessed, either for, I'm not talking only about investors, I'm talking about individuals as well, for assets repossessed through auctions. So there should be a grace period to be able to legalize those assets based on the previous regime, let's say, or on the previous laws. Because don't forget, and we are forgetting that if this continues and no solution will be found, and because as all of you mentioned, there is no visibility when you go to an auction as to what category or what type of illegalities you might have in an asset. You suspect, but you're not sure, and you might not be sure. It will pretty much try out the whole auction process, because why go into the risk of buying something that you might be stuck with without being able to do anything with it, even for your own individual use?
That's why the auctions are not doing, extremely well, and you don't have such a high strike rate, because there is a lot of uncertainty and it's a black box, and unless you know the asset and have some information, I don't know from where you get it, there's no. It's very hard to go and bid in an auction. It's something that as interim, it's just we wanna increase the that's the strike rate, and working on it to see how we can make this process more effective. However, it's a very complicated exercise. I think there is a question about commercialization and how we're going to commercialize the assets coming.
Well, let me just jump in on the previous question, just to wrap it up, that the problem isn't only who's going to buy from the auction, Because what we could do is say, let's stop the organic reduction, which is through the auction system, and go inorganic. But there a fund will have to take that on board as well as a consideration into the pricing if they're buying 1 or 2 billion in loans with underlying unsecured portfolios. So, and this goes right into the question of how we're going to sell the REOs. One way is you sell the loan and you let the purchaser deal with it, but that has a deep discount. And the way these factors are adding up, it's not going to help improve that discount if we're putting in an additional factor, which is, you don't know what the cat dragged in or what's in, the underlying asset. But to go to the question of, it's a question how we're planning on selling our REOs as banks, the ones we've already repossessed.
That's the best way of commercializing the REOs properties. Not your plan, the way.
Yeah.
Many ways.
The way, well, I mean, you can, what the banks are doing now is they're selling either through their sites, everyone has a website, the assets are posted. Other banks have direct purchase rights. Other banks have to go through a bidding system. I'll speak for us. So we have, cutoff level below which you can buy now. Then we hold auctions for, not auctions, sales processes, tenders for individual assets. Yeah. Those tender sales and individual sales are going very well. But as I say, it's one by one, so you can't expect to get rid of, thousands of assets that way. You can get rid of hundreds, certainly. And they're, we're achieving the 100% of the price, the market price. Now, the second way, which is the portfolio sale, is something that we all have to do because we all have a stock of REOs. So obviously, as Yannis Orfanos said earlier, and George Moudis, who's primarily active in this area, you have to do portfolio sales as well. And the key there is to grouping assets together for those investors, not the large BlackRocks and Carvels and Bains of the universe, because they're not that interested in transactions that are in the 20, 30 million size. You get a sort of a smaller group of funds or private equity players, and that is the prime way that the banks are going to get rid of most of their REO assets, and the rest will go through their sites. That's my read on the universe, but we also have Intrum and Dole Value there, so I'd like to hear also from them.
I think that it's really important, the appropriate maturity of the assets, because we have seen examples that, REOs, like when you try to sell them, the legalization, like the maturity, the legal technical due diligence have not taken place in the appropriate way. This creates delays. And I agree, like a clusterization, it's key, the right mix. And I think this is the way going forward in order to, to decompress. And as I said before, we should all be aware that the next 5 years, will be hundreds, and will be tens of thousands of assets coming in the market. That's for me.
I agree. And if I want to add, I don't have much to add to what Eli and Konstantinos said. We're also, we are investing also in our own platform to promote assets that we are managing. So it's easier for which will go live in the next days, and which will make it easier for people to find the assets we're managing. But I think the answer is simple. You'll have to do portfolio sales and you have to do individual assets or a combination of both. Otherwise, the stock will be too big to handle it individually only. It will take too long.
Yeah, I agree. I agree with the team. Yeah, including some, just to add, private auctions, not public auctions, private auctions. So, we have seen this play in Cyprus and it's going very well. And I'm sure more and more banks will adopt, or services will adopt a similar system. So, it's direct sales, bulk sales, auctions, and then, private treaties. You do private treaties with certain funds to buy certain books or certain type of assets.
Okay, I think that we are almost out of time. Let me underline something I understood. Mr. Mr. Romanos, yes.
Well, sorry. I think you know, bulk sales is a solution. It's a hot potato. So
We lost you.
the Greek banks have to get rid of some of the IRO because that's not their core business. The servicer, actually, it's their duty to monetize some of the collaterals. So if we want to see progress in a few years from now, we would be having this panel with no services and no banks, but with the bank that will have brought in the market, that will have the hot potato, and they do the wholesale to retail.
Thinking.
The good news is that we're all working towards that direction. The ecosystem is getting much better here. We have very meaningful discussions, and I think the solutions will be found one way or another, as long as the mix and the pricing are for the right type of investors, wholesale or retail.
Okay, so I think the whole discussion underlines that structural market problems are far more important than the COVID effects in the real estate market. This is what you said, I think, right now. This is what the problems are. Let me close with something, if we have the time, to close positively. Why should real estate is an international market. Why should someone come in Greece and invest instead of Spain, Italy, or Portugal?
I think I said something at the beginning. It's because of the yields. You know, the spread between the sovereign bonds and the yields in Greece are still attractive, taking into consideration the non-systemic risk and the macroeconomics of the country, especially with the new government and the new measures and the way we dealt with COVID pandemic. And so Greece is still attractive. There is again room for investors to.
And there are certainly,
Portugal, which yields are much more compressed than in Greece.
And low capital values compared to other countries. Investors, apart from yields and the spread, they are looking at capital values. For better or worse, we do have very low capital values. The yields are not necessarily that low. I'm talking about investment product here when compared to other countries, but the capital values are significantly low. So when an investor can see that he can buy an apartment for 500 euros or 700 or 800 or 1,000 euros per square meter when compared to other countries, it seems like a great opportunity. And I think that's the prospect also we have in terms of bulk acquisitions.
The government needs to improve the tax regime. The tax regime must be, improved and must be more attractive. And I'm not saying we're going to go like Dutch, levels 10%, but I think it should be like below 20%, start getting like more attractive and making sense for investors to come in Greece. And I think the government is going towards that direction. And I think we'll see it soon. And this will boost the market.
and from my side as well, I think it is an EU country that still has attractive yields. As Lila said, there is an upside. There are government measures that need to be taken, but at the same time, the government is always there assisting the market. And this is the type of market we live in, whether it's assisting people from a social perspective or putting money in. The EU is a very generous next generation package, and that's going to go a long way in keeping businesses afloat, and the liquidity is there. So I think that all of these issues are very positive and will encourage investors in the medium term as well.
I wouldn't say sea and sun. I would say about the growth story. Yeah.
Sun and safety. So I think this is the 3 S: sea, sun, safety. And I think we have all 3. We score well on all 3 points, S's.
And good food.
It's not an S, it's an F, so basically it's a GF.
Party notes on the good food.
I thought of the good food, but it didn't go well with sun and sea.
The growth story is the growth story. Things can only go up. We had years of recession. We had the biggest hits from the economic crisis. And now we have the fundamentals for a growth story, capital appreciation, and mortgage markets at the low levels can only go up. I think the fundamentals for things getting much better are here. So they will come at the beginning of the story. They won't come at the end or at the middle, as in other countries. So yes, there will be opportunities elsewhere, and I'm sure people will be looking elsewhere. But there is definitely a growth story, and definitely worth keeping a lot of them that came here. So we need to keep as well as bring more.
Sounds good.
Excellent.
We can end it on this positive note. Thank you, Yannis, and George, Konstantinos, Lila, Ellie, and Yannis for a great job moderating. That was a really insightful and candid discussion, appreciated by myself certainly, and I'm sure the audience. So my thanks to you all. We'll stop for a lunch break now. I hope you can join us for the afternoon sessions. And yeah, thank you again.
Thank you very much. Thank you all. Great panel, great discussion. Thank you. Thank you.
Bye.
Bye.